Hello, everybody. Everybody who likes trading. Going to be sharing trading today again, and the theme for this discussion is why humans are bad at risk management. So, and why people lose. But beforehand, I'd like to say that the main our work is on the topic of how not to lose, less about gaining profits, because profits are coming themselves if you are not losing. Maybe you're not getting that much profit if you wish to, but still all right. So, from previous trading experience, what we had was a few days ago. If you remember, it was F work or something. So our account here is that, and it's getting a bit like so. It was alchemy, and the work it was just not that much, but we didn't lose despite the call was wrong. So what happens here now is how I selected those coins here as that one there, which is like 15% like 6 hours. Nothing happened during last hour. Volatility is alright. Oh, we can track that one there as well. Let's have a look what happens there. Dash is growing, but the problem with Dash is it's a bit heavy. It's a bit heavy coin. Let's have a look what AI is gonna collect for us. I'm more interested in this, like, what is it, market cap? Right, okay. That's suspicious, isn't it? Current price. All-time low is 17. All-time high. It's a bit expensive, isn't it? And it seems like it didn't find any market cap information, whatever. Doesn't matter. So that's a popular thing, so it won't probably go down or whatever. So that one is a bit less popular. So, and that one there as well. I don't know. Would be possible to trade as just for the demo purposes. Was it? We've got 46. Some level. Maybe it's gonna give us a bit of like, okay, let's try it. 20, and then see what happens. So you see the liquidation line is straight away here, and you can see that we're all getting. We're getting what? Oh, here that's out. So I found the liquidation is too close for our coin, and change the leverage. So lift up the liquidation. So that's what Robert is doing, right? Because if it finds that your price is less than 10% to liquidation, and 10% could simply be in the next second. So Robert thinks it's a bit too risky for that, and it is just dropping leverage from, in this particular case, from 10x to 2x, but I have to remind that is in settings here. So if you don't want to have 2x, you can have 3, 4x, whatever. The problem there is just like if it's too close to a liquidation, then it's going to drop it down. Keep that in mind. What we have also here, take profit hedge, 7%. Yeah, what I would do usually is just check the overall volatility manually, something like that, right? So what we've got here is about 3-4%, so we can decrease it. It's no point to like, so let's make it 4.5%. Here is all good. 38%. Well, let's make it, I don't know, 3%. So I am going to create information pop-ups with images what every digit means, with the graphics in there, and you would be able to like clearly understand what is where and so on and so forth. Right, okay. So is it going to grow higher? I don't know, but while it's happening, can talk about why people lose and why robots supposed to take care of it. So look, are we trying to predict what's going to happen here? Yeah, no, of course, right? No, of course. Like you can go that, and that. You can go that, and that. Nobody knows. Like it can go sideways for another, I don't know, a few hours. So I'm not trying to predict the strategy I've got. How to get rid of it? Is it any other button to get rid of it? Just don't use it so frequently because I don't find it useful. Anyway, so because we can't predict the time when the trade is going to reveal itself, and also we can't really predict anything in crypto. It seems like it's a now bull run because of the economy and people are running away from the dollar to crypto, and some of them could be pumped, some not, and see how it goes. Now, regarding the topic of the stream, so why most traders don't lose because of their strategy, and they simply lose because they are humans. So they know the rules, right? So, for example, in my particular case, I set up the rule that in 4%, Robert is going to hedge it if price goes not in my way. If you take this emotionally, so you accept this, oh shit, I got losses here, and it grows up, and you think, maybe it's going to reverse, maybe this and that, and that's against the strategy, and this is the place where emotions take over. So you start breaking the rules. The ideal thing is just like, close it and just, I don't know, that's it. The robot does its thing because robot doesn't care. It just got settings and it's going to follow the settings you set up earlier. Right, and then when risk is under pressure, when you put a bit more capital at risk, then of course you take it more emotionally because you think about like, okay, if I lose, I don't lose just capital, I don't lose just numbers on the screen. I lose a car, I lose, a new kitchen, and my wife's gonna destroy me, and so on and so forth. Right, so there's that. Uh, and what happens? You can't really fight your emotions, and you are just listening to them, and that's the main problem. Like you shouldn't listen to your emotions. Of course, you have to reassess your positions, but the initial plan, is supposed to be in a place, right? So the main problem is loss aversion, right? So humans experience losses roughly twice as intensely as gains, and that particular feeling is destroying the performance. we've got here? Oh, it became green. Let's watch it. Let's watch it. So what happens with the results? Uh, Small wins, large losses, negative expectancy, right? So just looking at that graph here and thinking, oh, it's going to go higher and higher and it's going to make another like 50% or so. And either I close it here or wait and be fearful. And or worse, I start adding to this losing position because like the position at this moment, it's clearly losing, right? So I have to take an action. Well, I don't have to. Robert would take care about it, but at this particular moment, if I wasn't trading with Robert, if I was trading just like manually, I would be thinking, all right, I got lost 150% of my capital, so I have to do something about it, and I have to add up dollar cost average. So I have to make it smaller. No, I don't have to do that. And those emotions enforce predefined risk to reward and exit logic exactly as planned. Right, so winners are allowed to reach their full statistical age, and losers are closed at the predefined stop every time. So the emotions are on the way of that, and this is when Robert is doing it. So Robert doesn't fear, Robert doesn't hope, Robert doesn't have any hesitations because you know that feeling. Right? So should I click it? No. Should I? No. No. Should maybe yes. No. 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 Robert would take care of that. Right. So another thing is revenge trading, and this is really tricky one. Uh, I used to have it myself. So let's say I close it right there, right? And I lose 10 cents. So what that means? That means I've lost it and I have to get it back. So in my mind, the market owns me and I have to do something extra. I have to run extra mile in order to get my 10 cents back. But in reality, it was just a trade. The trade is closed. You have to reassess the coin or the asset, and you have to take clearly new decision in order how to trade that one, right? But in a human mind, there is a there is an emotion that something unfair happens, and this is bad because fairness, it's evolutionary mechanisms in our brain in order to keep tracking of favors between members of the society, of between members of Neolithic group, if you wish. Now there is no fairness here, right? Market is not fair. Well, it's fair. It's just presenting you the information of the current state, but like it's not fair to you. And if you do something wrong, you've done it wrong. That's it. You have to admit it, and you're not getting it back because market doesn't owe you anything. But people once getting that emotion of unfair trading to them, they are thinking, and also the frustration that they've lost, they are thinking to gain it back. And another thing is, like in this complicated function, you can't really control the time parameter, right? You never know when it's going to happen. You just assume sometime in the future it's going to happen. So you, you think, right, okay, I have to get my money back as soon as possible, and you start looking for the most risk risky trades, right? So you think, all right, okay, with this particular coin, it's like you find something. Let's have a look as an example, right? So let's say we just change it to negative or cerebral, whatever it means, or cerebral, whatever it means. Just sit here, right? Okay, I've lost 10 cents. I have to get it back somehow. So what I'm doing now is, and I'm rushing, and I'm excited, right? I'm angry. Market. Uh, why is opening that to me? Didn't want that. I've got one already. Yeah, that one there. So and I'm angry, and then so I've got that emotion like I have to get money back. I've lost. It's not fair, right? So what we're looking for, right? Okay, that one looks all right. Right? Yeah, yeah, it's fallen, and it will get back, and let's get in. Let's make money, right? Usually that leads to more losses, and like you repeat that thing a few times, and deposit's gone. That's what usually happens. So, would I try that? Not sure. I don't know what to do with that. However, on a random basis, right? So I would probably open some little long here, and if it goes up and it closes, but again, opens here. There is no clear picture to me. Well, there is no clear picture here as well, but you never know. Right. So further. The difference between bought and you is like again, bought doesn't have those emotions. It doesn't feel urgency. Like I have to get my money back. Nah. It's just looking at the situation, looking at the positions, and thinking, not thinking, but like either do I execute or not. AI helps, uh, but not much for now. Right. So. Uh, and but also robot doesn't have any parameters such as like minimum maximum trades per session, uh, time span between trades, and so on and so forth, like because it doesn't care if it sees the setup, it uh, acts accordingly. Right. Another problem is another problem is just when you see the position goes in particular way, you start moving and take profits and stop losses, right? So you think, well, if I move, take profit, I get a bit more money, and most of the times the price doesn't get to your new uh, take profit, and it doesn't get there because you moved it 3 times beforehand. So of course it can't reach there. Uh, the same is with stop loss. You're moving your stop loss because like when trade is closed, it's closed. That's it. Like you've got this feeling of loss, right? So you've lost it. But if trade is not closed, so you still have a hope, and hope is very bad. Like it's extremely bad, and you move stop loss a bit further, and you get a bit more hope. Yeah, the price is gonna go down now, like or up, wherever your position is, and it never does. Yeah, right, and it just goes there, and then you just increase your losses again. Uh, despite you planned everything before the trade itself, right? So you were thinking, right, okay, uh, I'm I'm going to execute it as I planned, and so on and so forth. But then emotions take over, and the thoughts are just like, oh, I just need a little more room for volatility to go up and down, or the levels are still valid, and you find other levels, and so on and so forth. So uh, I've got nothing against levels, and people do mm, use them. Oh, do I have levels here? Oh, that's interesting level, isn't it? But this level could be, if we change the frame, that could be also the level, isn't it? Let's say it's gonna be like that. No, no. Oh, we put it down now, or we can have it like that. Don't know. Levels interesting. So stop loss could be here, could be here. Oh, look, 4%, 4%, like 2%. The hedge is gonna uh, take place soon, so let's see how it goes. Right. Or another thing is like when you think, oh, I'll move it back after this candle or next candle. When this candle is over, then I'm going to sort of take another action and so on and so forth. And yeah. Or another important mistake what people are doing when they're trading manually is just like, oh, let me cancel this take profit and I manage it manually. I know better, you know what I mean? Like, yeah, I see. I have a gut feeling. It's an interesting joke when the bloke lost everything in casino, and then he's got last ring from his mum. An internal voice is saying, "Look, mate, you have to go to this like corner table, sit there, uh, put your ring, and then just try last time. And look, I'm your internal voice. You will win." He goes there, does that, and then loses. An internal voice is saying, "Oh, I was so wrong. Sorry." So yeah, that what happens when you trade manually. Oh yeah, going down now. Look, are we going down? Doesn't look like. I can go sideways for another, I don't know, a week, a few days, a few hours. Volatility is quite high, see. You could go in any direction. Well, I'm not touching it. That's the rule. Robert does it. Robert is just taking care of it here. Right. Oh no, that's the other one. Like get positions in here. Right. Yeah. You see, go back 1%, 1%. Oh, there's a daily right as well. Sometimes who pays now? Short pays long. Oh, yeah, but 9% yearly, not too bad. Like sometimes it's like to 2,500%. So a lot don't like it. So yeah. So advantages of the robot, of course, are obvious. Regarding the robot itself, like people are proposing different robots, and there are different strategies such as order network or something when they just like place orders in a particular distance and you set it up and so on and so forth. Like this is not my way of trading because I'd like to have a bit more control. That's one thing, and another thing is I'd like to see in real time what happens. So when Robert is doing some things, so for example, is setting up stop loss, take profit, or adding the hedge, or adding to the position, because there's another strategy here is chase profit. And what happens then? Then when, for example, if price goes down, it's adding the protective stop loss in order not to like get second time in this, and then it keeps adding to the position itself, to the winning position. So you sort of uh, if you've got 30% move of your asset, in the end of 30%, like all deposit is going to be in that position, and you're going to have a protective stop loss in order not to lose it. So like it's quite interesting strategy itself, but uh, this is extremely rare occasion because it has to go just down, and it doesn't have the volatility in order to not to close it on the way back. Yeah, but sometimes like once a month, once 2 months, uh, it makes some profit. Okay. Yeah. Uh, another silent account killer. And look, I've done that mistake many times myself. So that's why I'm not doing it anymore. I just position size drift, right? And usually position size goes in one direction. So you don't decrease your risky position, you increase your risky position, thinking the price is going to reverse and you're going to make money. Like, it doesn't work. It just doesn't work, right? So a price, especially in crypto, maybe in some other assets such as like silver, gold, where the levels are defined, and you can't really get 50% in gold in just a week or so. Yeah, sometimes, but like, it's a rare occasion. In crypto, you can get that in a minute, right? And sometimes some assets are just growing and growing, and they're making like 300, 400% a day, and you keep adding, hoping it's going to reverse, and it doesn't. And because you are hoping, you are doing wrong calls, and it's just destroying your deposit. As simple as that, right? The the following things have to be predefined, especially with Rob, is just the position size, the loss, right? In my particular strategy, I will explain it later, is loss is predefined, and I don't just overcome it. So if for example, in worst case scenario, the position hedged here, right, and it goes in the other direction, and something happens, there is a delta there which is growing to particular unwanted distance. So for example, I have delta 10%. So all predefined settings are telling me that there is no way to cover this delta with the wins, or just close the position, forget it, and start a new one, fresh one, maybe even with the other coin. So that's that. Yeah, but regarding the trading strategy, it's going to be later. For now, it just talk about emotional involvement in the trading itself, and position. Yeah, again, I'm not saying anything against the dollar cost average now, because why? Because nothing bad about it here. So for example, if I never $15, right? Yeah, just like added a bit into the winning position. Yeah, but the thing is, what I have to keep in mind is just the loss is defined. So if it's like, for this particular deposit is 250, if it's like -10, I have to close it. Like, I can't let it uh, to make it more, right? Yeah, yeah. And another thing is, after a few losses, frustration takes over, and you start thinking, well, I need a good trade. I need one just proper trade, and I get all in. I make like, do we have 50x here? Yeah, 25x. I open it with 25x, and I just make a thousand, like, especially if like 10 or I don't know, $15 left, and then you multiply it, and the problem there is, if you make it 25x, then simple volatility just killing the position, right? So even if you win 1, 2, 3, 4, 5 times in a row, it doesn't mean you will win further, because simply the odds are not in your favor. So, for example, what I mean by that is, right, yeah, do I have a Bing here? Hang on. No, wrong Bing here. Yeah, there. Right, that. Let's ask it. So, if I, oh, hang on, there's and the letter here. What is it saying? Position is modified. Set up, take profit. Hey, look. I said update profit. 5%. Is it gonna fall 5%? No, I don't think so. Let's change it here. 2. We'll be happy with 2. Right. You see, so it picked up and just recalculated it and say for me. So let's wait for 2%. Anyway, so if I place a position with 25x average and isolated margin where the liquidation level in percent. Yeah, let's ask it. So basically, what is going to say? In percent. Why does it say 125? 4%. Yeah, okay. Right. Yeah, 4%. 4%. I just start hedging there, and it's gonna be that one liquidation, right? So what's gonna happen here? It has to add protective stop loss, but I don't remember in 1.5%, I believe. So when price is reaching 1.5%, it's adding protective stop loss here, like that, right? And what that means is, like, doesn't matter what happens, like I get my 9 cents. So either I'm getting this or I'm getting that, right? For now, it didn't reach 1.5%. It had like 1.5% is the delta between average price and the current price. And when it gets, let's say, here, yeah, that bit there, then it's adding 0.5% here, protective stop loss. And when price reverses, then the position closing. And the closing without the loss, but that means that like strategy didn't work and whatever, and that means you have to try again. And would you agree that here and here a situation is completely different, right? Here we didn't know it's going to reverse and it goes up. And look, to be honest, I don't know here as well, right? So maybe it will reverse and goes up, and then I just hedges are going to work and so on and so forth. But like for now, you see, it goes as it goes, right? So uh, getting back to position size drift. Yeah, and and you do that mistake over and over again because you have same feelings over and over again, right? So you have your revenge trading, then you think this particular setup is does deserve more risk. Another thing is you start over trading, right? Because like normal trading is you see this setup, you do think this setup is okay to enter the trade, whatever that means, and then and let's say you're calm, you slept well, ate well, and so on and so forth, and you think, right, this setup is fine. Then you got that emotional boost, like either frustration, either euphoria, name it, right? And then you start seeing setups where they are not existing. And you start thinking, right, okay, if I do this and that, if like, and your brain is, it doesn't operate well, so to speak. So and then, but yeah, and the robot doesn't drift that much. Like it just enforces the same rule. If it's written 2%, it's gonna do at 2%. If it's written at like 5%, it's gonna do at 5%. That's it. As simple as that, right? So yeah, position sizes are calculated. So for example, if it has to partially close the hedge, so for example here in settings, so it's going to close 33% of the losing hedge leg, right? If you set 50 there, it's going to close half of it. So so that's that. And it doesn't scale up, it doesn't add more, it doesn't do the mistakes, right? It doesn't do the human mistakes. And in this case the risk stays constant. It doesn't change because of emotions. It's just robotic. And drawdowns stay survivable. So you get your statistics, and your statistics are telling that what do we have statistics here? That like the wins are larger than losses, and that's enough for us, right? So do we have statistics here? Right, yeah. So you see, it still have losses, but like it's unavoidable because once you hedge, of course it has to be lost there, right? Or especially it's annoying when you enter the trade, you got the hedge, and you got this situation here, right? So like 118.5, 118.2. So that means the loss is bigger than the gain. And but overall, the problem here is that what robot helped to do is it helped to preserve the capital. As simple as that, right? So let's say I enter that and just close with the stop loss. So I've lost it. I've lost it. That's it. But Robert says, no, 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 sorry, mate. Like I've got the other idea. I'm gonna hedge it, and when price reverse or something happens, other then I'm going to close it in a way that you're gonna be zero, right? And this strategy was developed based on like 1,000 simulations. So Robert knows what it's doing, and I don't have to put my dirty hands in it. Do you know what I mean? So what we've got here with our dash here. Is it going to fall? Is it going to? No, I don't know. Worth to wait. What do you think? Yeah. And the problem is like you never know when it's going to happen. Like it can go just hang on. It could go just a hair of that and then return and go back, and so like it's absolutely unpredictable. That's another thing about the brain, right? So the brain thinks it knows, like brain thinks it can predict the future, right? Especially when you start drawing trends and lines and find patterns here. uh, they are not there, but like okay, what we've got here, oh, that's the channel, right? It looks like a channel, so it has to get back to that, and then this is the support level, and out of that support level it's going to bounce back. Oh no, yeah, it's in the middle of a channel here, right? So that's why it like uh happen what, right? I'll just get rid of it. Oh no, yeah, after that, do that. Oh, another thing is it's a bear flag, no? Who says bear flag here? Alright, so you get down, and now we see this bear flag, and of course it's going to get down. No, I think it's all rubbish. We're just uh, we are looking at. Oh, I'm doing that. Look, if I can go control that, remove it. Oh, look, oh, that's cool. Yeah, what we are looking at is just this like image tally gray screen. We have to keep in mind that basically you are looking there and you're looking there, it's the same thing, unfortunately. Unfortunately, and the longer you look at that, the longer you understand that like you can't really derive any information out of it, the more deposit you're going to save. Right? I'm not talking about big coins like Bitcoin, for example, where half of a planet uh, is involved, right? But because there are some emotions in institutions and capital flow and so on and so forth, but like it's slow. It moves like 10% in a week or in 3 months or so. Like, well, look here, imagine. Where's my mouse? Like I've got two mouses, so that's why sometimes I make say, look, we've got 3% in 25 minutes. Isn't it cool? Isn't it cool? Yeah, but there is a risk, uh, right? And volatility here, like, or for example, here, look, let's measure 6% in 56, like 6% in an hour, right? But we have to know how to work with uncertainty, with chaos, how to calculate the probability here. Like, and again, my main goal was how to trade where when you can't really predict anything, right? So, yeah, the well, can I use a whiteboard here? Whiteboard, Microsoft whiteboard. Is it gonna? Nah. Okay. I need online. Oh, that one. Do I have to log in? Oh shit. I'm not ready for that. Okay, next time. I'm gonna do whiteboarding next time. Right. So look, I have to call it a day, but you got the idea. So not gonna wait for that. Just close it. Whatever. Right. So that's the whole idea about why a bot's supposed to trade. Uh, and you shouldn't trade manually because you're going to lose your capital. Yeah. Unless your psyche is a robotic one and you don't really suffer from emotions or you're trained a lot, but no, you're supposed to use robot. So, thank you very much, everybody, for the attention. Yeah, I hope see you next time.